Firstly, I think India does have a number of macro pressures facing it currently. On the economic side, unfortunately, India is seeing a deterioration in growth. The last quarter GDP numbers were down to sort of 4.5% growth. That's coupled with persistently high inflation. The country still has a current account deficit and a budget deficit, and the currency remains relatively weak. So a number of economic issues that the country continues to battle with. And on the political side also, there is continued pressure on the politicians who have been, I think, undermined partly through ongoing corruption scandals and have been rendered somewhat incapacitated in their ability to push through reforms, particularly now as we're in the run-up to elections next year. I think India, to an extent, has been or become used to living with high inflation. So it's not overly alarming in itself, but clearly it does compromise monetary policy and the ability for the central bank to stimulate the economy, particularly in a period such as this where we have slowing economic growth. So that is less than ideal. We focus on the companies, and really our job when it comes to inflation is to find companies that are able to pass on some of the inflationary pressure and have the pricing power and ability to do that. So that continues to be what we focus on. We continue to like companies, for example, in the consumer sector, which is less heavily regulated than perhaps the infrastructure or utilities sector, for example. And that, I think, gives us an advantage. So whilst the economy can continue to stumble due to government or lack of government reforms and regulations, there are certain sectors or segments within the economy that continue to do very well. When it comes to the consumer sector, I think it is largely a play on the so-called demographic dividend to some extent in India. There is clearly a huge population of 1.2 billion people that continues to grow. And within that, rising wealth levels and spending power that benefits many of the companies that we're invested in the consumer sector. And these companies continue to do very well, continue to deliver double-digit growth in revenues and earnings. The Indian market has been something of a laggard this year. It had a reasonably good second half of 2012, performed strongly relative to the rest of the region, but that rally has not continued into 2013. I think that does create some opportunities. From a valuation perspective, India is still at a premium to some of the other countries in the region, but by its own historical levels, it's looking fairly reasonably valued at around 13 to 14 times forward earnings. So there are still, I think, opportunities from a valuation perspective, and that continues to be a key focus for us as we identify new opportunities. We are overweight India relative to the region, and that really reflects the fact that India continues to be a great source of opportunities, investment opportunities. It's home to a great number of very well-run companies. These are world-class, professional businesses. We find subsidiaries of multinationals in India, as well as excellent homegrown companies that we fail to find elsewhere in the region. So we continue to like India, and we continue to be very comfortable with the overweight position to that market as a result.